Welcome back to another video on my channel. In today's video, I'm going to be going over a very simple strategy, okay, that you can learn in 2024 to become a profitable trader. Now, what this strategy is going to be the Asian sweep. Now, I'm sure you've all heard of it. If you haven't, then what it is we're going to wait for the sweep of liquidity that was built up during the Asian session, okay? Now, that is pretty much it. I'm going to be showing you an entry model to allow you to catch high risk reward trades very frequently in the market, okay? So I'm going to not carry on talking, we're going to get straight into the video. Like this video, subscribe to my channel so you don't miss any more of my uploads, and we'll get straight into it. What you want to do is, when you first open the chart, okay, and we're looking for this strategy, what you want to do is either mark out your sessions, okay, using, just trend lines or however you want to mark up your charts. The way I do it is use a trading sessions indicator, as you can see here. This is simply just called trading sessions, simple as, okay, put this indicator on, it's going to show you this background of all the different sessions. So, in my example, the blue background is the Asian session, the yellow background is London session, and the green is New York session. Okay, so with that in mind, we're going to get straight into it. Now, for those of you that are in the UK like myself, we're mainly going to be trading London session to New York. We're very rarely going to be trading Asian. So this is why we use the Asian sweep. So when we jump on the markets, more than likely price is going to sweep the high or the low of Asian session at some point within our trading times. So the way we can monitor this is by simply marking out our Asian high, okay, and our Asian low, which is just going to be the highest and the lowest candle during the Asian session. I hope you all understand that. So the highest candle or the highest point we went to during the Asian session, mark out. The lowest point in the Asian session, mark out. It's as simple as that, okay? Now what you want to do is wait for a sweep of either side and then look for a reversal. That is what this strategy is going to consist of. So you want to wait for a sweep of one and then target the other. Now you're probably going to be wondering, okay, well it happened here already. Now the main reason we wouldn't take this trade here, you can see we swept the high. We had red folder news at 130. So this candle here, you can see the volatility. So we wouldn't have entered a sell or looked for a reversal because it was red folder news. So what we then do is wait for the actual other side of liquidity to be swept. So we swept buy side. Now we're going to wait for sell side to be swept and then look for another reversal because the market has rebalanced after the news. Okay. Now I hope you understand that. So like I said, we want to be waiting for a sweep of sell side liquidity now that we've swept the buy side of Asian range. So I'm just going to play price through. And we start sweeping the liquidity now. Okay. Now what we want to look for is sign of clear displacement down. Okay, so as you can see here, we've got clear displacement down. So we have swept liquidity. So this black line here is the Asian low. You can clearly see we swept it. Now has there been any entry models? Has there been any displacement down that we can look for an entry from? No, except this. Okay, this is the one bearish fair value gap that is substantial in this move down. It's the only fair value gap, and it's the biggest fair value gap. Okay, so what we want to do is look for an inversion fair value gap or a silver bullet type entry. Okay, so what that means is we want to see either a candle close above this bearish fair value gap, okay, and then look for a reversal up, okay, or if we don't see that, we want to see a market structure shift and then entry off a fair value gap. So we want to see something like this. Okay, now in this instance I'm just going to carry on playing price through and you're going to see which type of entry model we get. Okay, so you can see we tap into this bearish fair value gap, and now what happens here? Okay, so you can clearly see that we respect this bearish fair value gap with another leg down, and what do we get again? Okay, I'm sure you've all noticed we get another displacement candle, okay, and another large bearish fair value gap. Now again, the same thing applies. What we want to wait for is an inversion of this fair value gap and wait for an entry. What's also important is, as you can see, the background has just changed. So this means that New York session has just started. Okay, it's just opened. So 2:30 is when we get a full open, a true open of the New York range. So you can clearly see we've changed colours from yellow from London session to green, which is New York. Now, why this is important is that we are now trading sessions and there's going to be an injection of liquidity, as you can see by this candle. So what this is going to allow us is to see more reversals in the market. So we're just going to wait to see what happens. If we tap into this bearish value gap, do we go lower or do we inverse? So you can see we come in, we tap into it and we start rejecting from it. Okay. Now we get this displacement up. Now simply what we're going to do is you can either choose one of your two entry models here. Now what you've got is an inversion fair value gap. So what you can simply do here is we can target our news high, okay, which is an extremely strong draw on liquidity. So we're going to mark that out. That is going to be our overall target if we decide to enter here. Okay. Now the next level we're going to take profit is this level. Now the reason we're choosing this level is because this is the biggest bearish fair value gap. It's an internal liquidity zone. Okay. The top of the liquidity, so the top of the bar side, is this news liquidity. The only other area in this entire downward leg of any interest to me is this bearish fair value gap, because we could easily tap in and reject from it. Okay, so we want to be using this as our zone to take partials, go risk free, etc. Now what you can do is enter a long position, okay, up on this candle close above. So the candle is now fully closed above the bearish fair value gap. We've got a successful inversion fair value gap, and our stop loss can go a candle close back below. So as you can see, it's a 4.68 risk to reward, extremely good risk to reward. So we're going to play price through, and you'll see how well this trade does. Okay, it absolutely smashes through take profit. Okay, hardly any drawdown, and it was a very clean setup. Now I'm just going to take the price back and show you another entry model that you could have used. So I'm going to delete that. Okay, so now we're back to the exact same point. We've had this inversion fair value gap. Okay, so you can either enter upon this candle close, which inverts the fair value gap, or you can look for a silver bullet type entry. So what we've actually had is a bullish fair value gap be formed whilst we were inversing a bearish fair value gap. So this is now clearly showing a flip in momentum, because we've been bearish and then we have had an impulsive move up, okay, and left behind a bullish fair value gap. And now what's important is that these two fair value gaps are very slightly overlapping. So what we call that is a balanced price range. Okay, when you've got two fair value gaps that overlap each other in opposite directions, that is an extremely good entry zone. So if you didn't like to enter upon the inversion fair value gap, you can wait for a pullback into this zone and then look for a long position. Now what's important about this is if you pick this model, the silver bullet type entry, sometimes the trade can go without you. Sometimes the trade can be that impulsive, it can just shoot up and leave you behind. But if it does come down and tap into it, you're going to get a slight better entry. So the trade before was a 4.68 risk to reward. We're going to see what this one is now. So you can see we inverse the fair value gap, we come back down, and we tap into our balanced price range, which is these two fair value gaps that are overlapping. So now you can enter a long position, okay, upon this candle, okay, so 50% of the fair value gap, and your stop loss can go below the fair value gap. Now this is an extremely good entry in the market, like I just said. Okay, it's going to improve your risk to reward, but like I say, it can leave you behind. So it depends if you have got a strong bias, okay, and you're confident that it's going to pick you up in the market. Like if you look at this trade entry here, it's a 27 risk to reward, okay, a 27 RR trade, which is absolutely ridiculous, okay, absolutely ridiculous. Now I'm going to be honest, I did not enter from this silver bullet entry. I entered from that inversion fair value gap, so I got a 4.68 risk to reward. Now if anybody caught this trade, then massive congratulations to you, because you just caught one of the best trades, in the most recent weeks. And again, of course, we know the outcome. It was a zero drawdown trade, absolutely perfect entry, 50% of the fair value gap perfectly, and away it went. Okay, now that is a simple strategy on how you can use the Asian liquidity okay, to your advantage and actually catch reversals like this in the market. Now, this happens at least 2 or 3 times a week, I'd say. I see it so often. All you do is wait for an Asian sweep of either the high or the low. Either look for a silver bullet type entry like this, so a break of structure and then tap back in, or just enter cleanly off an inversion fair value gap. Now, that is a very simple strategy that is going to make you extremely profitable in the market. If you can learn this strategy and rewatch this video and learn and master this strategy, you will be a profitable trader. I can almost guarantee it. Okay, now that is it for today's video. Thanks very much for watching. Once again, please like the video, subscribe to my channel. We're so close to 100 subscribers, and I'll catch you on the next video.